What's going on, guys? It's Jimmy here. The Fed, or the Federal Reserve, and Jerome Powell, the head of the Fed, just made a major announcement for millions of Americans. It's going to affect pretty much all Americans and businesses and everybody here in the United States. And this is going to affect your money, your pocketbooks, interest rates, credit cards, and everything here. And I'm going to give you the details here and the outlook going forward for all of 2025. This is really big news here. And I'm going to give you details here. Also, China says they're ready and willing to go to war with the United States based on what just happened here. So I got a lot of big news here for you guys in this video. I'm going to let you hear from the Fed in this video, and I'm going to show you what China said here in this video as well. And all of this is linked together here. So let's go over the details here for you guys in this video. Let's jump right in. I am live with you right now here. Let me know if you can see and hear me. Let me know, type yes in the chat. Let me know where you're tuning in from. You can let me know your city, state, or even your country, as we have people tuning in here from all around the globe. Don't forget to smash that like button for me. And if you haven't subscribed yet, click the subscribe button down below and then the bell icon so you don't miss out on future videos. We normally go live at 6 p.m. Eastern Standard Time. And help me reach 500,000 subscribers. We're getting close here. And this way you won't miss out on future videos. I keep you up to date here on everything going on here in our country on a daily basis, including the Trump or Doge $5,000 stimulus check videos, as well as everything going on here like this. So let me let you hear from Jerome Powell, the Fed head, the head of the Federal Reserve here, their announcement here, and then I'll kind of go over here in layman's terms of what this means here for everybody, the American people, businesses, and your money, your pocketbook. So take a listen to what Jerome Powell here had to say here.
So I have some brief remarks about the economy and the path of policy, and then I look forward to our discussion. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and inflation has moved closer to our 2% longer-run goal. At the Fed, we are intently focused on our dual mandate goals given to us by Congress: maximum employment and stable prices. Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year, extending a period of consistent growth that has been supported by resilient consumer spending. Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. Sentiment readings have not been a good predictor of consumption growth in recent years. We continue to carefully monitor a variety of indicators of household and business spending. Turning to the labor market, many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month. Smoothing over the month-to-month volatility, since September, employers have added a solid 200,000 jobs a month on average. The unemployment rate remains low and is held in a narrow range between 3.9% and 4.2% over the past year. The jobs-to-workers gap has narrowed, and the quits rate has moved below pre-pandemic levels. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. With wage growth moderating and labor supply and demand having moved into better balance, the labor market is not a significant source of inflationary pressure. For inflation, inflation has come down a long way from its mid-2022 peak above 7%, without a sharp increase in unemployment. A historically unusual and most welcome outcome. While progress in reducing inflation has been broad-based, recent readings remain somewhat above our 2% objective. The path to sustainably returning inflation to our target has been bumpy, and we expect that to continue. We see ongoing progress in categories that remain elevated, such as housing services and the market-based components of non-housing services. Inflation can be volatile month to month, and we do not overreact to one or two readings that are higher or lower than anticipated. Data released last week show that total PCE prices rose 2.5% over the 12 months ending in January, and that core PCE rose 2.6%. We pay close attention to a broad range of measures of inflation expectations, and some near-term measures have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain stable and consistent with our 2% inflation goal. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate.
So what does this mean here in layman's terms? And I know he went over a lot of different things there. He said at one point the economy is doing great, but inflation is a concern, and the tariffs are a concern. Tariffs are actually a big concern. Jerome Powell was speaking there as that was part of a larger speech there. Jerome Powell says the Fed is awaiting greater clarity on Trump's policies before making next moves on interest rates. They will not be lowering interest rates here today. Quote, "We do not need to be in a hurry and are well positioned to wait for greater clarity," the central bank chief said at a policy forum in New York. In fact, they could actually be raising interest rates here going forward if inflation goes crazy here due to tariffs. And that is possible with the 25 to 30% tariffs that are going into effect. Remember, there's actually a 30% tariffs on China due to the new 20% and 10% previously here. Bank of America says that stuff like Apple products and the iPhone could face a 9% price increase alone to offset Trump tariffs. And that, quote, "We are assuming all products will face at least a 9% tariff, or I think what they mean, price increase." So Bank of America analyst says, so we're now seeing price increase almost across the board on almost every major country. In fact, just announced here today, U.S. is announcing more tariffs on India. Products coming from India will now cost more as well. And he pushes India to buy more defense products for a fair new deal. I don't even know why we want to sell defense products to India. You guys can let me know your thoughts on that. India may escape Trump tariffs set to be imposed on April 2nd, as Trump says that India will lower their tariffs on us. But you got to remember here that any new tariffs the U.S. imposes, whether it's on Canada, Mexico, Europe, the European Union, China, India, any of these countries, I know that these might sound good in retaliation for tariffs that they have on us previously. These raised prices on any products coming into the United States, and when those prices are raised, The American consumer pays those prices for any product now coming into the United States. So ultimately, you and I, and this mostly affects low and middle income Americans. It doesn't affect rich Americans nearly as much because, well, they're rich. It affects low and middle income Americans. Okay? So just keep that in mind. The goal is to bring jobs back to America. That's a long-term process. So you guys can let me know your thoughts on this. Treasury Secretary, the new Republican Treasury Secretary Bessent, says that the economy could be starting to roll a little bit. Basically, the weakness in the economy even being acknowledged by the Republican Treasury Secretary. Could we be seeing that this economy that we, quote, inherited starting to roll a little bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a, quote, detox period. This is as the stock market had the worst week since September, reacting to a lot of these tariffs being announced. China says it's ready for, quote, any type of war with the United States as this is happening. China has warned the U.S. it is ready to fight, quote, any type of war after hitting back against President Donald Trump's mounting trade tariffs. The world's top two economies have edged closer to a trade war after Trump slapped more tariffs on Chinese goods. China then quickly retaliated, imposing 10 to 15% tariffs on U.S. farm products. As you can see, this really isn't good for either economy, as there are now tariffs going back and forth on each economy, the U.S. and China, which is making it restrictive for both countries. And we're seeing this from every single country, new tariffs being slapped on both sides, and it kind of makes you wonder, is this even a good thing? Quote, if war is what the U.S. wants, be it a tariff war, a trade war, or any type of war, we're ready to fight till the end, said China's embassy, said on X, reposting a line from the government statement. This is some of the strongest rhetoric so far from China since Trump became president, and comes as leaders gathered in Beijing for the annual National People's Congress. So, quote, if war is what the U.S. wants, be it a tariff war, a trade war, or any type of war, we're ready to fight till the end. And the U.S. responds, U.S. prepared to go to war with China, says Defense Secretary, amid threat of tariff retaliation. Defense Secretary says U.S. is prepared to go to war with China amid escalating trade war. China's embassy warned it's ready to fight till the end, and Secretary of Defense Pete Hegseth has argued the U.S. must be prepared for war and remain strong amid rising tensions with China. This also comes here as U.S. Commerce Secretary said the tariffs on Canada are just getting started, which means there could be more coming. And remember here that, so first of all, more tariffs, which means prices would go even higher on anything coming into the United States, products. And remember, we're seeing this from pretty much every country, that when tariffs are imposed on them, they impose tariffs back, and then reciprocal tariffs. Trump's saying that when they impose tariffs as reciprocal, Trump says he's going to impose tariffs back. So we're basically just seeing trade wars of rising prices, tariffs on both sides, and prices just keep going up and up and up. And then when the other country does the reciprocal tariff, that's not good for American businesses either that are trying to sell their products to the other countries either. So you kind of got to wonder, is this good for anybody? American consumers are paying higher prices, and American businesses that are selling products to any other country, Canada, Mexico, Europe, anywhere, are now, their products are higher priced overseas, which makes them, harder to sell over there because their products are now being slapped with new tariffs and people are less likely to buy them over there. So not to mention all the products are being taken off the shelves in Canada because of these new tariffs. Canada says, well, we're just going to take them off the shelves. So I'll keep you up to date here on all this stuff. Make sure to like, subscribe, and hit the share button. Share these videos with anybody that needs to hear this information and help us reach 500,000 subscribers. Also, don't forget that Medicare is open enrollment. Medicare and Medicare Part D, Medicare Advantage has open enrollment only until the end of March. So I have partnered with Chapter Medicare. I'll put their phone number here on the screen and in the pinned comment down below. If you or your loved one is already in, even if they're already in Medicare, call the number on the screen or click the pinned comment link down below. We've partnered with Chapter Medicare. They can actually search through all the different policies that are available right now. There's been a lot of 2025 changes here. And you'd be surprised here that you can actually get a better plan than what you're on right now. A lot of people are actually on plans that they don't know that they could actually get much, much better plans, much, much better benefits, and it could be very beneficial to them. So I'll put that phone number here on the screen or pinned comment down below. So check that out if you haven't yet. So thanks for liking this video. Share this video with anybody that needs to hear this information, and make sure to subscribe down below so you don't miss out on future videos and help me reach 500,000 subscribers. You guys are amazing. Click here to see Trump's big